All right. Hey, guys. It's Luis Gazitua, JAG Insurance Group, here with Brad Hubbard from National Flood Experts. Brad, appreciate you joining me on this educational piece. I know now the buzzword is coming out, FEMA's Risk Factor 2.0. But before that, I want to introduce you a little bit, right? And I consider you the flood, the authority in flood insurance. We've been working together for a few years, specifically, and you've taught me a lot breaking down flood insurance. I think me being an independent agent and obviously working with so many different type of policies, even when I got into it, I think the initial assumption was, hey, flood insurance is flood insurance, right? Flood is flood. That's always kind of the term that's bothered me for a while, especially when I'm dealing with insurance. And now it's become a lot more educational. You've brought a lot of added value to our firm and to me and myself. So a little bit about you. I don't want to go your background, but I know your previous background. Can you kind of get into it a little bit?
Yeah, absolutely. And thanks for having me, Lois. So my background is I'm a civil engineer, and I worked in engineering for a while, got out and actually got into insurance, got tired of engineering. And after I'd been in insurance for a little bit, I found that most insurance agents didn't really like or understand flood insurance. So I ended up doing a lot of it. And, after a couple of years of it, I started to see this overlap of engineering and insurance. And so I created National Flood Experts. And basically what we do is we work to lower people's premiums through an engineering perspective, through things that we can do on the engineering side that people don't really understand can be done. And we help our clients across the country to get their premiums down.
And we have plenty of success stories that we could talk about because you've done it for our clients. I know you're doing it across the country. But kind of what I wanted to really kind of emergency press conference, right?
Sure.
What's happening with FEMA. And I think that's something that we're going to be on the record because we really want to be proactive and warn kind of the opportunities and also what the situations for our clients is. FEMA's coming out with a new rating factor, right? Risk rating 2.0.
Correct.
The thought is it got pushed back. It's still coming out in October. Is that correct? Or is it still being?
Yeah. So it was originally supposed to come out October of 2020. It got pushed back for political reasons, the election and everything like that. But on October 1st, any new policies that are written will be written under Risk Rating 2.0. On April 1st of next year, 2022, all renewals will be subject to Risk Rating 2.0. And what Risk Rating 2.0 is basically they're throwing out the way that they've done pricing in the past. They're just getting rid of it. So it used to be that you would have an elevation certificate, and depending on what that elevation certificate said, they would base your rates on that relative to the flood zone. Now they're doing it to where it's more like the private model, where they've got a computer model that they've looked at, not just that 100-year storm, which is the flood insurance storm, but the 10-year, the 25-year, the 50-year storm, try to figure out kind of frequency. Anyway, they put all this into a big program, and it'll all be just geolocated. Hey, here's your address, here's your rate. And, like I said, that's going to start going into place. And what that really is going to mean for people is your rates are going up. FEMA is trying to sugarcoat everything, and, some people's rates will go down. But the vast majority, 75+%, your rates are going to continue to go up and up and up.
Now, it's interesting, the rates going up. We understand it's going to happen. Like, in your thoughts, like how much of an increase have you heard that might happen to just an average increase as far as flood insurance goes through the National Flood Program?
To get to that end state of what they're calling full risk rate, average is kind of tough, but the people who are in high risk zones, you're going to be looking at double, quadruple your current rates by the time it's all said and done, based on everything that I've seen.
Right.
A lot of the coastal ones, you're looking at 4 to 5 times what you're paying right now to get to that full risk rate, which is
significant. Yeah, I mean, it's going to have a lot of impacts, even as far as just the residential real estate, right? Or just real estate in general. Now, especially when you go from an investment standpoint, right? Your cap rate now, the flood insurance is going to be an exponential type line item. But going back, but you agree, just as far as FEMA itself, that there had to be kind of a change, correct? Their system was not working.
Yeah, I mean, if their goal is to actually, run a program that, makes money or breaks even every single year, right, right, profitable, then yes, they had to make some changes, and they put themselves in a hole with how they wrote the whole program 50 years ago. But this talk is not long enough for me to go into the some of that stuff. But if they're they have to bring rates up to something that is equitable. But how they're doing it doesn't really matter, in my opinion. This is what we're getting into. They have to make changes. I don't think this is the best change, but that's my personal opinion. But my opinion doesn't really matter.
Right. Well, I mean, just overall, I think there's a little bit of a trepidation, right? When
Sure.
You have just government programs overall, specifically focused on insurance, historically hasn't been profitable. I mean, I can't think of an example, right? And the private flood markets have been able to take advantage the last few years, but they write things on a profitability standpoint. They're able to pick and choose, right, what they can and cannot write. So it's interesting, and kind of on your thoughts, I mean, do you think now the private markets might be a little more aggressive? Because for them, they underwrite everything individually, and there's some flat out denials. But now they want to chase rates. So there might be, I mean, what I'm thinking too is they might be even more opportunistic when you got these four or five times X on renewals. Maybe they jump in as well and take advantage of that as well.
I definitely think so. I think that they're going to see this type of a general overhaul as an opportunity. If you're going to take people, if you have a preferred rate policy right now, my house is a perfect example. I don't have to carry flood, but I carry it. My policy is $572 on renewal. With risk rating 2.0, that number is going to keep popping up. Private companies won't touch my policy at $570. But if mine becomes $800, if it becomes $900, if it becomes $1,400, private policy coming in at $900, $1,100, all of a sudden, it makes sense for them. It makes sense for me. And there's going to be a lot of those type of opportunities. And they're smart. They're run by smart people. They're going to see that, and they're going to undercut the NFIP on these, like you said, cherry picking type of areas and policies, but they're going to undercut the rates by a little bit and make money on it. At least that's my assumption. I would if I was them.
Well, it's exactly what we would do, right?
Right.
Exactly. Now, I mean, looking at it, so a lot of your expertise, right? There's kind of two different angles. We talk about like helping people get out of a flood zone, right?
Yeah.
Helping people lower their rate, grandfathering. Anything just as far as if you own a residential property, what are some tips moving forward as far as to prepare for this looming increase, which is going to happen? I mean, is there kind of 101 or what someone should do first?
Yeah, the main goal right now is with the rates are going up. Okay, so then they're going to be going up at a capped percentage every single year. The goal for anyone who owns property, whether it's residential or commercial, is to get your rate as low as possible right now. Have somebody take a look at it. If you're paying $2,000 a year, if you can bring that down to $1,000 a year, you're starting so much lower that those 15% increases, it takes you 5 years just to get back to where you were, and another 5 to double on that. So the number one thing right now would be find out if you can get an NFIP policy for cheaper. Is there something you can do? Can you do a letter of map amendment? Can you grandfather? Would an elevation certificate help? Anything that you can do to get your base premium, your starting premium, as low as possible is going to be the most beneficial. And I have that on it. That came from one of the WIO carriers. That was their opinion as well. I won't mention, but they're saying get it as low as you possibly can right now because it's just going to pop up. So the lower you start, the more money you save over the long term.
So you said something about LOMA, letter of map amendment. It's something that you've done for a lot of my clients, right? Yeah. Now, kind of pros and cons, right? If you have a property, you're in a flood zone, but the specific way, the rules and regulations through the National Flood Program, how to get somebody out. What do you need to get a LOMA, which would mean you'd be exempt, correct? Like your actual folio number would be now in a non-flood zone? That's like the layman terms for a LOMA?
Correct. So basically what you have to do is prove to FEMA that the structure on that property is not going to be impacted by that 100-year storm, right? So FEMA says it's going to flood to elevation 9.0. If you can prove that none of that water will touch your building, you can get a letter of map amendment, which then it doesn't move the whole folio, but the structure, which is what's insured by flood insurance, is no longer in the flood zone, it's not, and therefore your requirement to carry flood insurance also drops. But, and it qualifies you for a preferred rate too, which is, that's the benefit for me is, I could pay $1,200 or I can buy a preferred policy for $572. I'll do B.
Right. And I think big too, like we're in South Florida. I know you're in the West Coast. I'm on the East Coast. Yeah, right. So it's one of those things where I tell everybody, you're not in a flood zone. I think everyone's in a flood zone. Especially where we live, right? So that one trick of being able to get out into preferred rating locks you in longer term. It just makes so much sense. So getting that LOMA, what do you need to get an actual letter of map amendment? Is it just from just reviewing an elevation certificate, survey, all or none, or just an elevation certificate?
Elevation certificate is the main document that you need. So if you already have one, getting somebody to take a look at that, from that engineering perspective, hey, is this something we can do? The elevation certificate is key. What we do in-house, we actually have our flood expert survey, which we sell for a little bit less than an elevation certificate because sometimes you don't need one. We'll go out and do the survey to see, is an elevation certificate the most beneficial thing here? What about, we can do a LOMA without one. Maybe there's something you need to add, venting, floodproofing, grandfathering,
the whole
study.
Every aspect of it.
Right. You look at it from the 11 or 12 different things that are possible that we can do on those individual surveys. But yes, if you have an elevation certificate, that is what we could do. We can definitely start there.
Well, one thing that, and a big part of our practice here is we do have a big real estate practice on our commercial side. Whether it's a lot of multifamily through here, not only in South Florida, but up the East Coast, as well as a lot of condo, residential, and commercial condo associations. I know those are two different angles, but so we talk about residential or just any commercial condo. What is one thing that they should do? I know it's a little bit different, but what's kind of the 101, or what do you suggest every board should look at doing within the next 6 months?
Yeah, if you're talking commercial condo, residential condo, letters of map amendment, you're not going to be able to do that. Or even if you do, they're not beneficial because for some reason, X-zone policies are actually more expensive than elevated, based on elevation policies for condos. But what you want to look at in those type of scenarios is, when was it built? What were the flood zones then? Is there any type of grandfathering you can do? Is the correct building diagram on there? Because a lot of times you'll see these 7-story condos and the elevation certificate says it's slab on grade. It's like, no, it's not. You can't actually build 7 stories on a concrete slab. There's 50-foot piles going into the ground, but the surveyor didn't mark that, so it's getting rated wrong. So if you can make some sort of a change on the rating, how it's rated, and we've done this a ton, especially on this coast recently, where we've cut their premiums in half or more. And, if you're starting at, this one happened last week, you're starting at $76,000, and when we're done, you're at $31,000. It takes a long time to get back up to where you were once these rate increases start happening. And that's just a ton of money in all the different unit owners or if it's commercial, the building owner's pocket over that amount of time.
It's a defensive approach, right? That's called that. Now we got to play defense, especially with the changes coming up.
Yep.
As far as looking at that, when you deal, do you have more success talking to the property management companies directly, or is it more of the boards asking it? Because I know with associations, there's 2 levels of communication. What's been your most success dealing with the boards directly or the managers themselves?
We've had success in both. The nice thing about a property manager or an insurance agent, honestly, we've had more success with insurance agents, is the board looks to you or that property manager as the expert, right? You're the advocate for them. So working with a property manager that is advocating for the community, saying, hey, you guys really need to look at this. You guys should take a look at this, as opposed to, talking to the vice president of the board and, hey, is this a scam, or they're trying to, get this money out of us. When you have that advocate in your court that really understands what we're doing and what we're trying to do for the community, it makes it it's so much easier when you've got that other person with us helping to convince the board, look, this is extremely beneficial to you guys in the long run.
I think that just articulate this via email is not going to work, right? Explaining somebody, because again, going back to the flood's always been flood. No one's brought it up. Now it's something new. They kind of, it's hard. You have to be able to digest it, understand the benefits from it. the second part of it to the multifamily, which is even, a kind of bigger part of our book as well. You have a lot of, this is something where depending on their strategy or how long they're going to hold on to these assets, but whether they're underwriting new purchases or current ones, what's your kind of advice to multifamily owners who want to be proactive about these looming flood increases?
With multifamily, our biggest success has been in letters of map amendment. We've done that for multifamily in probably like 36 states now. It's but the real benefit there, and it depends on, do they own one or two multifamily properties or do they own 30? Because a lot of times when you own 30, you've got, some sort of massive umbrella policy, right? That'll say, we're going to cover you for all of your flood on your entire property, except you've got a $500,000 deductible on each one of these buildings that are in a high risk zone. If we're able to change those to a low risk zone, now you lose that $500,000 deductible on all those. So you can technically drop your NFIP policy, and this risk rating 2.0 doesn't matter to you.
Correct.
You just keep your private policy that has an umbrella for the entire thing. If you don't have that, just doing a letter of map amendment, you're not required to carry flood insurance anymore. So if you choose to keep it, preferred rates on multifamily is like $700 and something for a $500,000 policy. It's ridiculously cheap. And it's a massive impact on your cap rate. If you're able to just add $40,000 to your NOI, that's worth $800,000 on the sale price. Nobody's
going to say no, right?
No. And anytime we're talking to an owner and we explain the details, they're like, yeah, how quickly can we pay you to get this done? Because the benefits are massive on multifamily. So
let me ask you, on multifamily, what information do you need as far as being able to identify, can you get a LOMA on that property? A lot, and this is on the underwriting process, because that could be a deal breaker, right? Being able to cut that flood out, lower that cap rate, or make it more advantageous to them. What do they need to get you to kind of look at that?
It goes back to the other, we prefer to do the flood expert survey because, an elevation certificate tells part of the story. But if they already have elevation certificates on a property, that even though it's a limited amount of information, it gives us so much more information than just looking at it on Google or using the databases that we use. Elevation certificates help incredibly, or even if you just have a topo survey, hey, when we bought this, they gave us the topo survey from construction. That gives us a good idea of what kind of elevation we're looking at around here to see, is this possible? Is it not?
What happens too is can you use an older, and let's just call it a current elevation certificate on file by the seller? Is that at a minimum enough information to do a deep dive?
Absolutely. Elevation certificates don't expire, even though they have that expiration date on the top, which confuses people. But they're good. If you have a 1980s elevation certificate, the data is still the same. Buildings don't really move much, maybe an inch or two over 20 years, 30 years. But any data that you have for us to look at, it gives us such a better starting point than, and we may still have to go out to the site or maybe not. But at least we can say with a lot higher certainty what the result of something would be. Here's what the final scenario is going to look like for you.
I mean, question, a third scenario, right? For situations or buildings that have had maybe flood claims in the past, there's not much we can do. How do you feel about flood proofing, and does it help, as far as a building owner? I know it's may not help the rating per se, depending on the carrier, maybe some private companies, but as far as flood proofing itself, what's your opinion on that?
Flood proofing, you can only do it on commercial. You can't do it on residential. At least you can do it, but you get no benefits on the rating side. Floodproofing, it's just like hurricane shutters, right? If you have a house that is an area that, twice in the last 5 years I've had a foot of water in my house. Okay. Well, for like $300 or $400, you can buy these little 3-foot panels that go on all the doors in your house, and they lock in, and they're pretty watertight. It's to keep the water out of your house. For a $1,000 investment for the 3 outside doors, you're not going to have a foot of water in your house. That's a pretty good investment. And you do get on the commercial side, most of the time we see flood proofing on the commercial side is for permitting, right? They want to build, they can't bring in dirt, so they have to flood proof. So it's expensive. It can be cost prohibitive on the commercial side. I mean, depending on what you're looking at tens or hundreds of thousands of dollars to floodproof. But depending on the scenario, if you've got $1 million worth of equipment in a basement and you really don't want water in there, then floodproofing that first floor to make sure that you're not getting water down in there, or at least the water is a trickle. It's not 2-4 feet of water that's going to damage that much of your, equipment or, contents. It's the technology is, and it's getting better and better and better. There's a company that we work with a lot. I know the guys over there, and the technology is so much better now than it was 10 years ago.
The other thing, kind of going back to like what's happening in the looming increases. I mean, have you thought about, or have you heard any specific areas that might be more affected? Obviously, we talk about coastal, but are your thoughts being a lot of X zones now being turned into flood zones? Because now you might have that lender now where it wasn't a lender requirement. Again, we're trying to change that mindset that everybody should have flood, but the whole lender requirement thing drives me crazy. Everyone's like, no, my bank doesn't need it. I don't need it. Are you thinking that there's going to be a percentage-wise, a majority of those X zones now going into flood zones?
So first, on your point, that not requirement thing, and that makes an insurance agent's job so much harder to sell the flood insurance, and it goes back to realtors, right? Like, you don't need flood insurance here, right? And so the flood advocates have been trying to teach that world forever. Like, stop saying that.
It's almost like it's advantageous. No, you could buy this house. It's not in a flood zone. Like that's it. And then
Like, I mean, you go drive around your area. No flood required. No, like it's on the sign. To buy the house. So that's a separate side. But anyway, to your point of more people being zoned in, it's two different things there, right? So the maps aren't changing as a part of risk rating 2.0. They are changing in areas, but it's two totally different systems. So right now here in Hillsborough County, we've got new maps that are coming out. And yes, there are people who were not in a flood zone who are going to be in it. And those people really should buy policy. They need to buy policies before the changes, because then you can buy that preferred rate and start at that $500 number, as opposed to your bank sends you a letter in 6 months from now and you have to go buy it, and now you're paying risk rating 2.0 rates, and now you're paying $1,200. Anyway, different point. But the flood maps aren't going to change as part of this. FEMA has been spending hundreds of millions to change the maps across the country, specifically coastal recently, where there have been a lot of changes like that. Some people going in, some people going out, but it won't really change that much of what you're talking about of, everyone who's in the next zone is now going to be required to carry flood. Those numbers are still, you're still going to have that in versus out mentality on that federal requirement. None of that is changing with risk rating 2.0.
Okay. Now the map's changing on a per county basis. That's usually done on average about 10 to 12 years. Is that accurate? Kind of in that range?
That's on the good side. It's probably more 15 to 20 years on average. I think Palm Beach County over by you guys, they got new maps 3 years ago, and the maps before that were the 80s. So even in like a really, really high risk area, you're talking 30 years between map changes. Here by me, Pinellas County is one of the most flood dense areas, probably maybe the most flood dense counties in the country. And their maps were from 2003, and they're getting new maps this year. So you're looking at 18 years on a really, really flood dense county. So I think 15 to 20 is about right.
It's interesting. It's because of the west coast of Florida. It's not as deep, correct? So
right. It's very shallow.
It's more shallow, so it's more of a propensity to have flood issues on that side.
Yeah, the surge would be different. It's the water, because it can't go down. There's no depth. So I think you've got to get on a boat for like 4 hours to technically do deep sea fishing here, whereas over by you can still see the coast and be deep sea fishing
pretty quick. The last thing, but I want to ask you, as far as as far as new construction, because it does come up as well, right? And again, going back to the lender requirements, banks, the conversation between what's required, what lenders required, what insured should do, what we should advise. Someone's starting to do a new project, right? They're considered in a flood zone. How can you help them eliminate that requirement prior to breaking down or doing that construction loan?
You really want to look at it when they're in the design phase, because most developers and engineers, this is what I did before I got into here. You're taught to, hey, we want to build this, we want to get this permitted and built as quickly and as cheaply as possible in a way that makes sense. Where some of the times it might make sense to make some design changes, right? As opposed to building this building on stem walls with stairs leading up to it. If we actually brought in some fill dirt, now we can get the property removed from the flood zone, and you aren't required to carry flood insurance either during construction, after construction. You can do it for both ways. Or your rates are going to be significantly less. Hey, if you bring this up another 6 inches, it's going to cost you $20,000 in construction, but you're going to save $60,000 in the next 5 years in flood insurance. So looking at it in the design phase before they get too far into it to where you can give those little pieces of advice, it's huge. I mean, when you're looking at the long-term value of a property, some small changes can be massive. I mean, you and I looked at one on Brickell that it was like, if they would have just made a couple different changes, you would have gone from 150,000 in flood to like 30. And it's little things where if you can look at it in the design phase, we can keep people from making some expensive long-term mistakes.
Well, Brad, I mean, I appreciate obviously working with you and obviously your support as far as helping navigate my clients.
Of course.
We're going to, this is an exciting time for us. I mean, I consider myself, you're the authority, but I'm kind of a flood. I enjoy it. I get, at least in this office.
You're better than most.
I'm better than most. That gives me a little confidence. But I guess in this office, I'm the flood expert. So by talking to you and being in situations, trying to figure it out, right, dealing with some of these guidelines, been able to get a little more well versed. But I'm excited about this opportunity to educate, help our clients, and bring that value. So obviously working together, I'm excited about the future, and I appreciate you doing this. We're going to give out your information, obviously, and carve this out. But thanks for your support, Brad, and we're going to keep working together.
Yeah, I appreciate it. I appreciate being on here, and we just want to be a tool in your guys' belt, and anyone who uses this belt, like that's what we do.
You were the secret weapon, but now I'm letting the world know. So I'm giving you away.
Pulling it out of the bag.
I appreciate you, Brad. Thank you very much. Thank you very much for doing this, and we'll talk again soon.
Thanks, Luis.